Well, hello everyone, and welcome to the Anti-Corruption Risk Assessment webinar, with particular focus on prevention and detection of corruption risk. Well, firstly, my name is Steve Tosh, and I'm the Company Director of Global Risk Alliance. And I'm going to talk to you today about a number of areas of risk assessment and how to put together a risk assessment. And we're going to focus on 5 or 6 areas, particularly in relation to the identification of data sources, both internally and externally. We're going to look at the planning process, particularly building a structure around it, or key areas within the organisation to look at, and data sources as well. We're going to discuss a risk assessment model, particularly where an organisation creates an annual risk assessment or creates risk assessments for, if like, operational or strategic reasons. There will certainly be a value in creating a model where particular elements are considered each time we build a risk assessment document, because these documents can be quite substantial in nature, depending on what the outcomes of the document you wish to have. And we're actually going to look at as well, in addition to the sources, we're going to look at the processes or risk areas within the procurement process and the project process and the life cycle of projects, and how we then develop that into the organisation framework, looking at the risks in the framework, the gaps, and how we develop the anti-corruption framework of an organisation, looking at policies and procedures, systems controls, and expertise and capability of an organisation, and also how that links into an organisation's strategy, its 1, 3, or 5-year plan, and how it responds to, if you like, this risk assessment and how to mitigate those risks. So just briefly, a bit of background around myself and why I'm discussing this subject today. I was, as a much younger man, I was involved. I was in law enforcement for 22 years. And during this period, I was in charge of, certainly the latter part of my career, I was in charge of an anti-corruption capability. I was in charge of a money laundering team, and I was also the head of an intelligence capability. And certainly from the intelligence side, and when we talk about intelligence, I'm talking about information and information on risk. But, law enforcement, the risk relates to crime. And this, running this department taught me a number of key areas, but in relation to risk assessment, it's looking at I suppose 3 key elements. It's looking at the operational side of an organisation, looking at, if like the investigations or operations that are ongoing right now, and how we can develop risk and information around that to support the investigation. It's looking at the tactical side and the managerial side of the decision making of an organisation or operations or the business of an organisation, and how fraud, corruption, and crime risk can impact those decisions. Because ultimately, one of the key elements of decision making is around things like resources, people and capability and expertise. As an example, looking at an event. Particularly where, an event, a march in London as an example, where the risk is low, and it's assessed as low because the information received highlights that there is limited numbers of people going to be there. There's no individuals that we identify that are going to be violent. There's no criminal elements. Then we can actually reduce the resources, the controls in place, the expertise that ultimately reduce the cost of that event. And the same principle relates to business as well. It's no different. The methodology is no different. And when we look at the strategic part of an organisation, we're looking at, if like, the overall risk assessment and the planning that needs to go in place to mitigate the long-term risk. Like I said, the 1, 3, and 5-year plan that goes into the organisation. So this, for me, was key learning for myself, and particularly when I was involved as a head of an anti-corruption capability and drafting national strategy and international strategy and approach to fraud and corruption risk. That learning made things much simpler. The method of drafting a strategy and developing an approach became much simpler because there are common themes in developing a risk assessment. So I'm going to go over some of that today and talking about key areas. We're going to talk about the information and the data sources, the typologies of fraud and corruption, the links between the two, talk about the model itself, talk about the processes where there can be risk, particularly within organizations, and ultimately the simple development of a framework. So without further ado, I'm going to carry on to share my screen. The actual this part of the webinar will be broken down into 3 parts to make it easier, I suppose, to consume. And the PowerPoints that I've created will hopefully, because there's a lot of information to share, and hopefully you gain a lot of information from this training, there will be hopefully simple slides that will explain the discussions behind it. Now, the first area I'm going to talk about is the corruption risk and its link to procurement fraud. Now, I've outlined 5 key areas here in relation to this risk. And to start from left to right, we're going to look at the insider threat. In other words, an employee or a group of employees that commit fraud or collude together to steal company assets. Now, from an individual perspective, it could be something as simple as the theft of attractive equipment, i.e. an individual. If we look at an organization such as Amazon, if an organization has or uses procurement cards, you will have, in a purchase, you will have the buying address and you also have the delivery address. Now, the buying address would be the company address or the organization address, but the delivery address could be that individual's home address. The simplest way of hiding this method is simply to destroy the delivery part of the purchase. So that's it's like a simple singular fraud committed against an organization. But you could also have a much bigger scheme, and this could be areas such as in asset misappropriation in the warehousing, where you have a group of individuals involved in the theft and simply create fictitious paperwork or destroy paperwork. You have an individual within the warehousing or another area who is procuring additional equipment. And you may also have someone like a delivery driver who's involved in removing the equipment from a particular location and delivering it to either a home address, a third party, or a business address. And particularly where an individual is linked to a supplier, they could simply steal the organization's assets, deliver it to the supplier, and then resell it back into the organization. And then you have, in the second column, you had your fraud and your corruption, where an individual is either linked to a supplier or helps facilitate through bribery, helps facilitate the award of a contract. And that can be done in various methods of manipulation, which we're going to talk about shortly. And you also have your external fraud. You have your supplier fraud. Now that could be the collusion of a number of suppliers together where you have a bid rigging scheme, where not only will they manipulate the award of the contract and who the contract goes to, or what supplier the contract goes to, but also the price. Because an organization won't be getting value for money because the companies have inflated the lowest bid, and every other bid that's submitted will be much, much higher. And you also have the single supplier, the supplier fraud, where it could be something as simple as the vendor submitting false invoices or inflated invoices to commit the fraud. And the fifth element is, if you like, the organized criminality, where a criminal, for example, is driving past a school or university that's got some construction work going on and identifies the contractor through the livery on the side of the vehicle. The individual goes to the company website, takes a logo off the website and puts it onto a letterhead, creates a letterhead, and sends a change of bank account details to the organization, asking for future payments to be made to this new bank account. And they may even follow it up with a phone call to give credibility to the letter. Now, the same thing can happen in email compromise, and this has become certainly more common, where you have an email compromise. Either an email address is created similar to that used by the vendor, or you have through hacking, where the email account of the company has actually been hacked, and potentially a number of emails are then sent out to their clients asking for change of bank account details and putting the criminals' bank account details for the diversion of future invoice payments. So in simple terms, these are the 5 key elements of the scope of corruption and its link to procurement fraud. And as I've said, there are 23 points here which become more important as the risk assessment is developed. Now, in 2020, the Association of Certified Fraud Examiners published its report to the nations, which it does annually. And in this report, it highlighted a number of areas in relation to risk and risk assessment. And starting from the top right in relation to training, it highlighted that where an organization has a training program, an anti-fraud training program in place, you are 90% more likely to receive hotline reports on fraud. In relation to control measures, it highlighted that 1/3 of the frauds were committed because of control weaknesses. The most common global scheme is corruption. And in relation to asset misappropriation, it was the most regularly committed fraud. Around 80% of the frauds were around asset misappropriation. And when we talk about asset misappropriation, it's not just about the theft of goods and materials of an organization, it's also any other description of what an asset is, which includes cash or monies as well. So things like the diversion of funds, false invoicing, again, come under the banner of asset misappropriation. But what it highlighted was the average was around $80,000 for the mean average was around $80,000. Around 21% of the cases were $1 million and plus. The certified fraud examiners estimated that 5% of organization revenues is lost to fraud. 29% of the cases were identified in 6 months or less. And in 7% of cases, it took over 5 years for the cases to be identified. Now, the reason why this becomes more relevant is it actually reflects back on the 2018 report from the Association of Certified Fraud Examiners, in which they stated, despite the increase in spending, many organizations are still addressing fraud prevention by using a reactive defensive approach. So in other words, if we are only looking at cases as they come in, we're not actively or proactively looking for fraud in our own organization. So we aren't using detection methods or data analysis or proactive audits in our own organization, then we will only identify and respond to fraud when it is reported via hotline. Now, when we look at the cases where it took over 5 years, if we had a a proactive response to detection of fraud cases or corruption cases, how much revenue would we have saved the organization? So a fraud or corruption case may be small, but if it's conducted on a regular basis, then over a 5+ year period, the chances are the fraud is turned into millions or tens or hundreds of millions, depending on the size of the organization and the scale of the corruption. The ACFE identified that only 54% of global organizations said they have conducted a general fraud or economic crime risk assessment in the past 2 years. Fewer than a third said their company performed risk assessments in the critical areas of anti-bribery and corruption, anti-money laundering or sanctions and export controls. And 1 in 10 respondents had not performed any risk assessments at any time in the past 2 years. So when we look at the various typologies of corruption and linked to fraud, and we have the fact that we don't do risk assessments, or we only conduct a reactive response, there is a greater likelihood that we do not understand the risk picture of our own organization and the revenue loss that's happening to our organization. Now, when we look at the Kroll report from 2019, in which they reported on the incidents or the key incidents that organizations were dealing with over a 12-month period, they highlighted a number of additional areas. In particular, from left to right, in the most common were data leaks and data theft. So when we're looking at our insider threat, particularly when we focus on corruption and the contracting process as an example, the data leaks or data theft can impact a number of areas, not just in the, for instance, in the tender process, in the leaks of information or the tender scoring or the competitors' information, but it could be areas such as the specification, historical data, pricing information. So there are a number of areas in which, because the report has identified this is one of the key challenges that organization faces, we should consider it as part of our own risk assessment. And the other areas such as reputational risk from third parties, external fraud, internal fraud, bribery and corruption, counterfeiting, and money laundering. So we have a diverse nature of additional threats that organizations are impacted by globally. So if we aren't already looking at these key areas, we should, at the very least, add these into our organization risk assessment. Now, the final area, I'm going to look at the procurement process, in particular, the pre-award part of the process, and look at the areas of influence and manipulation, particularly the insider threat. In the pre-award part of the process, I've highlighted 11 areas that we're going to look at. Now, particularly as we take into consideration the typologies of corruption and links to fraud that we've already identified, we've already looked at the, if you like, the external reports of the additional risks, and now we're looking at the procurement process. We start to build a picture of the many risks that an organization can be impacted by. Now, we can start with the identification of need, where, as an example, a fictitious requirement is created. Do we have a process in place as an organization where needs are identified and the individual who's identifying this need is recorded, where we have a justification process and a business case process? Is it documented and is the process reviewed? And then we'll look at design and specification. Can a specification or a design be created to award a particular piece of work to a specific contractor because the design or specification has been created around their product? As an example, a project manager was involved in a project teamed around a particular product and service, and they struck up a corrupt relationship with an American contractor. And they shared historical information with the contractor to let them know the type of work that was being conducted by the organization, and also highlighted the pricing structure of their organization, what they were paying for the current products. And then later on, the project manager was involved in the new tender process and the design of the new product, and actually was able to influence the new design around the contractor's specification, their product they had on the shelves. Now, what this meant was any other company competing was never going to win, because they either had to create their own product, which would require additional cost, or they submitted a similar product which didn't have the same specification. So this company in America was always going to win. And then we have areas of obviously budgets that can be manipulated, particularly where is there only one budget getting used, or is there more than one budget to hide the total cost of a project? And also procurement routes. What is the procurement route that's being used? Is the single source route being manipulated towards a particular contractor? Are requirements being split to keep below the tender threshold, so they ensure that it goes towards a particular company? Or do we have, for instance, restricted tenders, where an organization will identify 3 contractors as an example, and 2 of the vendors involved are inferior to the third because we're always going to influence the tender process towards a particular company? And then we look at the pre-qualification process, particularly look at the, if like the vendor vetting. Can an organization be onboarded or avoid the vetting or pre-qualification process because of an insider? And then looking at the bid response, as an example, if I'm competing for a piece of work and I ask particular questions around the requirement, are these questions and answers shared with the other bidding companies, or do I receive an unfair advantage from these questions because the information isn't shared with the other vendors? And also looking at the matrix. How is the matrix, the selection matrix, created? Is it a standard matrix for the selection of contractors to measure their performance during the tender process? Or are there additional criteria added in there that would influence the process? As an example, in relation to a medical services contract, there was a number of manipulations in the tender process, because firstly, the current provider of the medical services contract wasn't asked to tender. Secondly, the timescales of the bid process was only 5 days. So the individual company was notified early of the up and coming bid. And of the 5 companies that were requested to submit bids, only 3 were able to respond in time. And the 3 companies were very similar in rating. So an individual on the selection board added additional criteria into the selection process at the last minute to ensure that the contract was awarded to that particular company, which was agreed before the tender process started. So really, this is the first part completed as part of the anti-corruption risk assessment. The next element of the assessment will be looking at the process, the model, and how we develop the model and the data sources around the model to build our risk assessment. So that's the end of part 1. We've now looked at a number of areas for the risk assessment. We've looked at the scope of corruption and its link to procurement fraud. We've looked at a number of international sources on corruption and fraud risk and the additional risks that an organisation should consider. And we've also looked at the pre-award part of the procurement process and a number of threats and areas where an organisation can be targeted. One of the areas that should be considered in all of this is the need for education within an organisation. It's an invaluable tool when it comes to developing a risk assessment, because where staff understand the various typologies of fraud and corruption, there's a greater opportunity for an organisation to identify and report and investigate corruption risk, and ultimately build your profile on corruption that will allow you to develop your own framework and strategic approach to mitigate these risks. Now, in part 2, we're going to move on from the pre-award to post-award part of the procurement process. We're going to look at the risks within projects, and we're also going to look at the additional sources of information that should be considered from your own organisation, and we're going to look at the simple design of a risk assessment model. So join us now in part 2. And if you'd like a copy of our slides or require additional questions answered, you can contact us directly through our website on our contacts page or through our social media.